What's up, guys? It's Matt from Hedge again, and today we're going to be talking about some interesting stuff that has to do with CBDCs, central bank digital currencies. But before we get started on that, it's very important that I tell you I'm not a financial advisor. I do not accept liability for any losses you may incur. Let's move forward to this video and you should be enjoying it. Central bank digital currencies are basically a digital variant of our current dollar. A lot of people have mixed feelings about this, and they probably should. One of the reasons being is that basically they're just digitizing the current monetary system, which already has clear issues. I'm going to start by saying that depending on how they approach a CBDC, it could either be something that is useful or something that would actually become a hyper surveillance state. But we'll put a pin in that for now because I want to talk about some of the key points as to where this may be heading. The ex-head of the digital Yuan from China and their digital currency, what they're using, he mentioned that a currency like this and many other currencies like this would likely do very well being built on an Ethereum platform. Interesting that he would mention that Ethereum's platform would be great for rolling out central bank digital currencies. Now, it's a no-brainer that you see how Ethereum, the way it's been developing with DeFi and all these other incredible platforms for adding to the monetary system, would end up being potentially used for a central bank currency. It's not a shocker. It's a new technology that's doing a lot for, I guess, the finance system. And if the head of the digital yen decides that this is probably a good idea, chances are he probably used it on his currency or used a platform similar. Another thing he mentions about CBDCs is that they shouldn't just be currency. Currency would not be any more valuable than having cash or debit. Technically, it would just be a buzzword for adding in a blockchain to the money. So the way he approaches it is he believes that these currencies, these CBDCs, should actually have smart contract interoperability. Now that is actually where they could retain some value, because then you'll be able to operate the current system with smart contracts, which would make it much more valuable than just making a digital cash variant that they could survey extremely easily. I'm going to go back to what I was saying about the hyper surveillance state now, right? So if we go into blockchain money that's being rolled out by the central banks would just end up a situation where they could see what every user is spending very, very easily, which for me, and I'm sure for a lot of other people, that's kind of like an infringement of our privacy. And not to say that we believe that they're going to use that data for anything other than just knowing how we spend. The reality is that maybe we just don't want to know, or we don't want people knowing how we spend. Even if it's just for a cup of coffee, why does everyone got to know we got a cup of coffee today? The reason that separates cryptocurrency in a decentralized world versus a centralized currency like a CBDC is this. When you're registered with the central bank, you have your social insurance, you have all these things that tie you to that account, and then you just spend the money and they'll have it recorded in a blockchain from there. From there, it's like almost as if like they're taking all your data and selling it without your permission. Whereas when you're going into like Bitcoin and Ethereum and all these decentralized cryptocurrencies that revolve more around creating platforms for everyone, you actually get incentivized for that data. And not only that, provides you an opportunity to remain anonymous, similar to cash, until you decide to register a wallet. Meaning that if you're buying things with Bitcoin and other cryptocurrencies, until you register that wallet, it's more or less anonymous. So if you decide I want to put a down payment down on a house with Bitcoin, that's different. Then you're going to have to give the wallet address, you're going to have to pay your taxes, you're going to have to do a lot of things that require you to register with the government, which is fine. If you're at a point where you're able to buy something large scale with cryptocurrencies, by all means, go for it and register your wallet. But at the same time, if they're going to be eliminating cash from the system, which is very likely, cash will be going soon. There's no reason cash will be staying because as you can see with COVID, everyone's been tapping away with their credit and their debit cards. And now even cryptocurrency options are becoming more and more viable. We're hitting a point where if cash is going and they want to curtail decentralized cryptocurrencies so that they could roll out a central bank digital currency, it's almost like they're trying to monopolize spending at that point, which I'm not necessarily sure I agree with because it'll give them a deeper hold on the economy and they've been running it extremely horribly. So it's like, would you really want these same companies who've been ruining everything to continue to have that kind of monetary monopoly over us? So it becomes a complicated situation when you look at a central bank digital currency and what it actually provide you. If they have smart contract interoperability, they'll have more value. But I do believe that both systems decentralized finance as well as centralized finance should find a middle ground to work together. That's where I could see the most value in both systems, because then you'll be able to go seamlessly between the two and actually capitalize on gains to be had. Whereas if a central bank currency becomes the global norm, the way I see it is this will become a currency war in the future. And after you see a currency war, we don't know where the economy is going to head, because most companies, most countries will likely attack each other using their currency as well as their debts and all these other things. So it becomes a very complicated thing when you look at it from an external perspective of cash, central bank currency, and decentralized currencies. We got to find a middle ground where we can use all of them. But the way it's going, they're trying to inflate the cash out of the system, so that way you could be forced to use one or the other. And then it's going to be a battle probably of supremacy between decentralized and centralized digital finance. That's how I see it. I'm sure there's a lot of other people that share my views. And one more thing I wanted to talk about on this whole subject of central bank digital currencies was that Europe is fearful of slipping behind in this race. So Europe understands that large tech companies are stepping in and they're being able to offer much more than banks could. And not only much more than banks could, for lower prices, for more efficient systems, just overall better financing. And Europe now is fearful that they're slipping behind, and they feel that every country that doesn't roll out their own central currency, central bank digital currency, will likely fall behind in the future and lose their hegemony within their own countries to large tech companies. I call this like a aha moment, where for years, governments and all these other systems have put down cryptocurrencies and decided, oh, they're not going anywhere. They're not going anywhere. And this whole, I guess, reinforcement of trying to keep it down has actually increased its usage and its demand and its use case. People want to have their finances away from their government now, because we've noticed that our governments globally, everywhere, have been constantly failing. And I'm not trying to say anti-government or anti-this, but it's like clearly the establishment needs a reform. Things got to change. And if we keep putting the same people in power, it's not going to. Europe understands they're slipping behind. Big tech is coming in to offer digital solutions that they won't be able to provide unless they start catching up now. What it comes down to is that if Europe has this fear, and they're considered one of the, I guess, leaders, first world places, if they're having those fears, you could imagine what that means on a global level. When you have China, who's already started their pilot, you have Europe, who hasn't started, the rest of the world hasn't even come close to starting, and then you have the USA, that already has a lot of different stablecoin systems already weaved into their digital economy. The way I see it is like the US is ahead in terms of having their stable coins out and being the most used. Then it would be China, because they've already started the pilot of using it within their country and trying to roll it out globally for everyone else to use. And then you have Europe, which hasn't even started. They're still dealing with their whole EU situation of just Europe not doing so well recently, and then the rest of the world. That's pretty much wraps up everything I have to say about this. So I want you guys to like, comment, and subscribe. Follow us on Instagram and all our other social medias, and have a great day.